G'day guys, welcome to Financial Fruits episode 9, and we're going to go a bit more into depth with investment analysis. So last time we talked about asset allocation and a appropriate asset portfolio for could be for some people. Obviously, of course, this video is obviously not a personal advice. We don't take into consideration your personal circumstances. It's more general in nature. And now we're going to go into investment analysis, which is basically how to analyze your individual investments if you decide to go into the direct equity route. If you go into the indirect route by investing in exchange traded funds and listed investment companies, the investment companies themselves will list their investment philosophy. So, for example, let's say you invest in, invest in an ETF. So let's just say Vanguard Australian Share Fund. They will tell you their investment philosophy, okay? And their investment philosophy is to chase the ASX 200 index. This is an example, of course, okay? So just be aware of it. So that's their investment philosophy, is to basically chase, as in like replicate the ASX 200. So that is their main objective. That's their analysis, is to chase an index, okay? That's what their analysis is. And they prefer a passive investment, which is a part of their analysis process, whether you prefer active management, where you feel like day trading is a lot better, or passive, where you go for the long-term approach. Now, let's just go into that first one. So we're going to go into technical and fundamental analysis. So the difference between the two is simple. Technical focuses on patterns, on the share price, profits, and the like. So what they're looking at, and ratios. So what they're looking at is they are looking at, a PE ratio is one example. Their price to earnings ratio. Basically, this measures whether a company is overvalued or not. So basically, a high PE is bad generally, okay? So a high PE is bad. And a low PE is good. Generally speaking, okay? Generally, that's what it's viewed as. You do need to view this across industries as well. Now with the fundamental analysis, fundamental is a bit different. So fundamental does a deep dive into the company itself. Okay, so you need to know what the company makes, any advantage over competitors. You can tell already that it's a very, very broad approach. It's cash flow, profitability, future business prospects, dividend stability. Like, is their profit can be done over and over again? You can see here, it's from the bottom up, okay? That's what they call bottom up analysis generally, okay? So you're basically going to the company and being like, okay, so how did they make the money? What did they make the money from? And do they have an advantage in the space? So let's say, for example, you got an iron mine company. Sorry, guys, actually put it in full screen again. You got an iron mining company, and they made 75% of their profit from a one-off gold mine venture, not off their iron. Do you think they're going to be sustainable? Probably not. Given the fact that their secondary activity was their main driver. Could they switch? That's the main question you have got to find out, okay? So you can see with fundamental analysis, a lot different. It's more of a deep dive into the company itself rather than the industry. Now here, the technical analysis is really across the industry, whether this sector is performing well. So you can see the difference already between technical and fundamental analysis. And basically you can use a mixture of them as well, or you can use, all of them all together. Technical is really associated with short term, while fundamental is really associated with the long term view as well. So you can see here, a lot of ETFs would be using this as effectively, okay? And a lot of LICs that are active, or less investment companies that are active, would be using this. So you can see the different investment analysis and where some of them can be right and some of them can be wrong. This is more of a subjective thinking because everyone has their own opinion, their own thoughts at the same time. Now, with your own portfolio construction, you need to take advantage of this and be, aware of this, that there are multiple different analyses that can dictate whether a share goes well or a share performs poorly. And you should always take a deep dive into your indirect investments, whether the investment philosophy is being met. Are they tracking the ASX 200 or are they investing into some random thing down the track? We have our investment guru at our company who basically saw that one of the LICs wasn't investing as per his philosophy and just dumped them. That's the thing you got to pay attention to as well. So just be aware of that. So that's basically investment analysis. We got the bottom up approach and a top down approach. You can get a bit mixed up at times as well. Sometimes you don't have a keyword yourself. With the top-down approach, you look at the economy, the industry, then the company. From the bottom-up approach, you look from the company, the industry, and then the economy. Both analyses work well. You can use both to build your portfolio, and those are things you got to take in mind. If you want to take a deeper dive more into it, you got to look at the company's annual reports and stuff like that as well, and really get an ascertain or a quick summary on where the company is doing, how they're making their money. Was it a one-off? Is it sustainable? That's a fundamental analysis. From a top-down, small ratio, like for example, the PE ratio, is the PE ratio, even though it could be quite low, is it just the same for all of the markets? It could be. So you got to double check that as well. I'm going to tell you right now, investment analysis is a lot of work. That's why some people go to investment managers or manage funds or investment managers instead, because they are more expert in those areas and have more expertise and deal with it on a daily basis. Well, you may just want to just invest your money to just get some growth out of it at least. But you still have to do this research at least once to check if you're investing in the right investment manager. But overall, I'm a bit of a fundamental analysis kind of person. If you guys want to know personally, I do prefer looking at the company itself, what it's doing, what its goal, how the workers feel, and all of those qualitative analysis. Because basically, it's not the numbers that win in the end. A lot of people boil it down to numbers. It's the quality of the opportunities they have, the cohesion of their team. Because sometimes, if the sums are big, if the sum of the parts is less than the end product, and then eventually that company is going to go very, very well, and also may get a good takeover bid, may even blossom and become a mature company itself and be a big, fighter in its own business. You never know. But anyways, guys, hope you guys learned a lot from this as well, from investment analysis. It can be quite dry, but overall, it is very, very exciting once you get into the depths of it, reading the company reports, seeing many different investment managers and their styles, and it'll be very, very awesome for you. Anyways, guys, hope you guys have a great day, and see you guys later.